Starbucks, the ticker SBUX, it's a $106.5 billion market cap company, currently trading in and around $93. So for the 13th year in a row, Starbucks has increased the dividend. The dividend has more than quadrupled since 2013. Based on projected EPS of $1.45, the payout ratio increased to 66% from around 48% 10 years ago. That's dividends per share divided by EPS per share. The growth in sales has been driven by price increases, not an increase in transactions. Starbucks has the capacity to further increase transaction volumes in the future. Over the past 12 months, the stock is up 6.7%. Year to date, it's down 6.4%. Forward PE of 22.5 times. Current PE ratio of 37.8. Price to book ratio of 68.5. Price to sales ratio of 5 times. And price to cash flow of 20 times with a PEG of 2.29. It's not a cheap stock, but the opportunities are out there. Let's go over to Finscreener and take a look. Okay, so here we're inside of Finscreener for Starbucks on the Starbucks page. And as you can see, for most of the stocks, the graphs have been going down. The market did experience some weakness. Starbucks is probably a dividend pay. The dividend payout ratio is around about 66%. That's dividends per share divided by earnings per share. Okay, so this is up from around about 48%, 50% 10 years ago. So that's a dividend play. So what's been going on with Starbucks? So let's take a look at some of the valuation parameters here. So if we look at that, the PE ratio is high. This stock is not cheap at all. But they have been increasing sales mainly through price increases, not transaction increases. They do have the capacity to increase transaction volumes down the track. So let's take a quick look at sales where we are. So let's go down a bit. Blow out sales. So the revenue growth has not been startling. On a 5-year basis, it has picked up. So it is better than others in the industry. So it is better than around about 65% of companies which are out there. Not so much the S&P 500, but then also a stock like Starbucks competes with also the technology sector, and clearly the revenue growth is much, much greater there. If we look at some of the financials, let's look at the financial strength. There is talk that the long-term debt has to come down, but the interest coverage ratio does seem quite strong. So at this point in time, I'm not excessively concerned about the balance sheet as long as they've got the balance sheet to grow, and they seem to be able to do that. Okay, so that's it for Starbucks.